making them, all right, or implementing them. It's at their discretion. So they give the example here, which is a good example. So you might say, okay, we have a customer, he owes us a lot of money, and in the system, he places an order, and we look in the system and we see that he owes us a lot of money. So our typical control would be, we're not going to send him the new order until he has paid us, right? That would be a typical control. However, if that is a very large customer and he has a very good credit record, he always pays, yes, he's a bit late, but he always pays, then you might decide to send him the goods even though he owes us a large amount of money already. All right? And so that would be a discretionary control, something that is up to humans to decide whether or not to implement. And that's why this is important. The discretionary controls are often where things will go wrong, and they'll go wrong because of errors in judgment. Okay? And that's the point I want you to remember. Non-discretionary controls is basically where the control is automatic. Okay, it's automatic. So, people don't have to decide, should we apply this control or not? It will happen. And a very simple example is the PIN number. Okay, when you use an ATM. Okay, you don't have a choice. Well, should I put in the PIN number or not? Obviously you need to input the PIN number to make sure that you're the right person and it's your money that you're accessing. Now, clearly, non-discretionary controls can also be bypassed, right? If somebody has decided to commit a fraud, there are ways of getting around controls, but nonetheless, that's what it is, a non-discretionary control. It doesn't depend on judgment. Ignore. This one I would suggest, all right, scan. Okay, so scan the technology-based controls and scan the financial and non-financial controls. And here the important thing is really, the thing to remember is really this. Remember I was talking earlier that there are risks which are not easy to quantify. They're qualitative risks, all right? And so, for example, risk to your reputation. And so you have controls to protect against the qualitative risks, such as making sure you have rules and guidelines which say that as an employee you must behave in a particular way, for example. You have strategic plans, you have policies in place which protect your reputation. Okay, so these are examples of controls over qualitative risks. Any questions? I can't see the chat box here, so if you have a question, you need to speak to me. All right.
Sorry, excuse me.
Yeah.
I have a question. Are we expected to come up with some controls in the SBL exams?
Yes. You are expected to identify the risk, or at least talk about the risk, and identify what the controls were, and identify why those controls were insufficient. Okay? But you're not expected to recommend other controls. I mean, so let's take coastal oil as an example. You would say clearly there was a risk of suboptimal performance by our joint venture partners, right? That risk existed. Clearly, we did not carefully enough evaluate their controls in this area, right? Because the control did not work. Yeah, there was no inspection of the valve. Although it could be argued that we could rely on well services to correctly implement their internal controls, and they did not. And so what is our response as Coastal Oil is not to say, okay, well services, you need to inspect every valve, because that's their business. Those are their controls. But our response as an internal control for us might be to stop working with well services. Okay, we know well services is a risk, and therefore to control that risk, we replace them with another company whose quality control is of a higher standard. Okay, so yes, we would need to identify the internal control, but what the control is really would depend on the circumstances. And if you look, okay, so you can look at the risk and control from two perspectives. The first perspective is from well services. The risk was that the valve would not work. The control was the valve should be inspected before it was input. The control failed, the valve failed, big disaster. That was well services risk and control system, and it didn't work. Look at it from Coastal Oil's perspective. The risk was working with a joint venture partner who did not have reliable internal controls. That was the risk that we took. Our control is to stop this risk or reduce this risk of happening again by getting rid of well services and replacing them with another company which has stronger controls. And this time we will make sure that they have stronger controls. We will perhaps test their control systems and so on before we sign a contract with them. So from Coastal Oil's perspective, that is our control. Change well services, find somebody new with stronger controls, and evaluate those controls before we sign a contract with them. Okay, so yes, we need to talk about the internal controls, we need to identify them, but to do that, we need to look at each risk and control in its own context, as I've just done here. Context of well services, the context of Coastal Oil. All right, so that's why I say it's important that we understand the principles behind it, rather than, this kind of control is for this risk, this kind of control is for this risk. There are all kinds of risks, quantitative, qualitative, some that we have anticipated, some that we expect, and many that we have not anticipated, and we don't expect them. So you can't say, I don't know what the risk is, but here's the control for it. You can't do that. So internal controls are about a way of thinking, about a culture. And that means you have to understand what you're trying to do, why they exist. Do you see that? Is that clear? If it's not, please tell me.
It's clear. Thank you.
Okay. Just kind of stepping back from making that point, it's just another reminder that SBL is not a theoretical subject. All right? It's not about learning the syllabus and repeating it in the exam. No. It is about asking how you would behave in the real world. What would you do in this situation? And to answer that, you need to use the principles that we cover in the syllabus, and there'll be principles from different parts of the syllabus. You have to decide which principles you're going to use. You might decide to use a framework to help you with your analysis, and then you put all that data information together into a comprehensive answer. Okay? You're never going to get a question, 5 marks, what is an internal control? No way. This is a strategic professional exam. It's a professional exam at the strategic level. It's not a first-year university exam. Okay, so moving on. 1.5, control procedures. I would honestly do nothing more than scan this area, okay? Just scan it again. These are just examples to help you to think about the different kinds of controls that exist, all right? Just to kind of consolidate your understanding. So scan this. Just to give you different examples of different controls. Ignore activity 2. So is everyone clear? So at 1.5, just scan it, please. Okay, just to remind you or what types of control exist. What types? Ignore the activity as usual. Okay. Now here, get rid of this. Monitoring. Now, I've already said that risks change all the time. They change all the time. Some become more important, some become less important, some new ones come along, some other ones leave, they're no longer a risk, and so on. So it's a very dynamic environment, all right? And that's really the most important thing about this. Okay, it's the most important thing. So the risk environment is constantly changing. All right? So control systems need to constantly adapt. That's the point. Before they can adapt, we need to have information on the changes. Yes? How can we adapt if we don't know what's changed? Which risks have changed? For that, we need an effective monitoring and reporting system. All right, is that clear? Very important point, that risk is not static, and therefore internal controls can also not be static. Also, it's telling us that the monitoring and reporting of these changes is part of the internal control system. Okay, so internal controls are not just things like segregation of duty and doing a trial balance. Internal controls is about the whole environment. All right, any questions? If there are, speak now, please. So this bit, I mean, that's what I've just given you is the main part of what you need to know. But do read through this. There's nothing new and exciting here. Let me get rid of this. It's a bit distractive. Okay, so just read through this. There is nothing new. We have talked about most of these things already. All right, so it shouldn't take you long, but it is important that you know what they are. All right. This section says, okay, well, fine. You know, we've just said we need to have information, but what's the quality? How high a quality of information do we need to have? Okay, what data do we gather? What information do we communicate? And really, this section simply says, well, you need to use these criteria to decide the answer to those two questions. Yeah, the questions are, what data do we gather? What information do we communicate? And so the criteria we use is, and again, there's a lot of common sense really, clearly the data we gather must be accurate, so make sure that our data gathering picks up only accurate information. It must be complete. Well, now, here, I would add something. As far as possible. As far as possible. Okay? What do I mean? Well, sometimes, we're collecting data about a process which has not yet completed. Okay, so we're manufacturing, for example, and we make, 1,000 units, and at the end of the month, when we have to report, many of those units are still work in progress. And we're gathering data on things like, what level of rejects do we have of finished goods? Well, we can't say exactly how many of the work in progress units will be rejected. So in that sense, the data that we collect will not be complete. Okay, so, there are times when we can't give complete 100% data simply because it doesn't exist. So we give as complete as possible. Other characteristics of good quality information, well, cost benefit, of course. Yes, it must not cost more to gather the information than its value. Get rid of this. It must be appropriate for the person receiving it, obviously. So for example, if you're sending information to the board of directors, they don't want to know how many units are in work in progress. They want to have an idea of the amount of money we're spending on wasted products. Okay? So you need to give them the information they want. It needs to be relevant depending on the decision that needs to be made. Now, what is relevant? Now, it's important. This is important. Some people say, well, give them all of the information. They can take what they like from it. Well, that is not particularly professional. You need, in the examination, to look at the data available, identify what is relevant to the audience, and communicate only that information. So again, using coastal oil as the example, we said that the relevant information was, we're proud of our reputation, etc., etc., etc. We decided that it was not relevant to start to blame well services for the problem, and therefore we didn't use it. All right? So that is what I mean about being selective, and that you, again, as a professional person, you need to use judgment to decide what is relevant and what is not. And that is what you will need to do in the examination as well. Is this relevant information for the audience? Is this going to help them to make the decision that they need to make? Okay, so again, this is how you show your professionalism. Is it reliable? I don't know why they use the word authoritative. I think reliable should be is a better word. Okay. Is it on time? Of course, no point getting information late after you've already made the decision. And is it easy to use? I think this is a silly one, really. It talks about presentation and length and so on. I think I would probably put that into relevant and user targeted. Okay, so it's included in those. So that's all I need to say about that. Okay, so good quality information. Again, don't sit there learning this list. Do not. It's just a way of reminding you of what is important when you are recommending or when you're actually putting together information in your answer in the exam. All right. This, ignore, 214. This, simply scan this. I mean, it's a nice little diagram, but it's the only thing it says really is, where does information come from? And that's just, again, a little reminder. Information comes from employees, yes, including whistleblowers, yes, whistleblower is somebody who sees something wrong in the company and makes that thing public. Clearly directors, non-executive directors, auditors, and so on. Internal audit function as well is a source of information. And of course, customer feedback. So if we have very high levels of rejects or returns from customers, then that is information that we need to have for our internal control system. Okay, so yes, scan it. Again, it's a bit of common sense, but it's sources of information for internal control purposes. Please just read this carefully. It just tells you, that you have to. How do you monitor your controls? In other words, how do you make sure that your controls are sufficient and they're up to date? Okay, so just read it. It'll take you 2 seconds to do that, and that's all you really need. It's a bit of common sense. Read all of that. This part, you ignore. Too much detail. Too much detail. Yep, ignore this. Now this, you don't ignore. This is important. And I suggest that we have a coffee break, all right, 15 minutes or so, and we'll continue after. The coffee break. Okay, so I make it 1:31. Just thinking about our breaks. It's for you now. I guess it is what it is 1:45 in the afternoon, and so perhaps from tomorrow, what we'll do is this first break that we have. We'll make it longer, so that'll give you more time for lunch. And then we'll have another couple of 15-minute breaks afterwards. I'm just thinking about whether it's convenient for you. I am flexible, but it's just an idea. So tell me if you like that idea or not. So we have, let's say, a 45-minute break. Excuse me. Excuse me. So we have a 45-minute break at about 1:45 your time. You go off and have your lunch, and then we'll have another couple of breaks, but shorter, 15 minutes later on in the rest of the time. Any comments? Would you like to do that? Please give me some idea. Everyone's being very quiet. Okay, we've had one response. All right, so I haven't heard anything from anyone else, so we'll do that. So tomorrow, our first break, which will be at about 1:30 your time. Okay, we will have a longer break, let's say half an hour, 45 minutes, to give you time to have something to eat, and then when we come back, we will have two short breaks of, let's say, 15 minutes. Okay. All right. So let's continue. So before the break, we were here. We were talking about audit committees. See if that's better. Talking about audit committees, and audit committees, a very important part of this syllabus. We must know what they are, what they do, and also recognize that clearly this is part of the internal control system. Okay. Now, it comes from a report written in 1992, so we see quite an old report, by Lord Cadbury from the Cadbury chocolate family. And this is what they had to say. All right, this is what they had to say. Audit committees can bring significant benefits to the organization. All right. How? Improve the quality of reporting, climate. So this is, by climate, really we mean culture, of discipline and control in the organization, which reduces fraud, enable the non-executive directors to contribute an independent judgment and play a role. Okay, so the audit committee is comprised of only non-executive directors, and for a non-executive director to really do his or her job properly, they need this kind. I mean, they need an audit committee comprised only of non-executives, because that's how they can independently influence the executive board. They are a forum for the finance director, but remember, the audit committee is not just about financial audit. They are the excuse me. They are the connection, if you like, between the external auditor and the firm. All right, so that means that you avoid a situation where, the external auditors talk to the executive board, they become friends, they have a very cozy, comfortable relationship with each other, and that can cause all kinds of problems. So you have the audit committee in the middle, between the board and the external auditors, and so that's important to have that independence. Okay, and that's what these 2 points are about. Let me just get rid of this. So that's what these 2 points are about. Strengthen the position of the internal audit function by providing a greater degree of independence from management. So IA, this means internal audit. Okay. So it protects internal audit from influence of the board, which means that it is independent. Okay, that the internal audit function is operating independently. Now, let me just explain this by giving a very small example. Let's suppose that there is a fraud going on in the finance department, okay? Now, and let's suppose we don't have an audit committee. So the internal audit function identifies this fraud and reports it to the finance director. Now, let's suppose the finance director doesn't want this information to come out. I don't know, for whatever reason, okay? Maybe the finance director is involved in the fraud, or maybe he feels he's going to be embarrassed if this comes out and he didn't stop it, okay? So the finance director says that, to the internal audit function, don't report this, and if you do, I'm going to make sure that you're fired, or whatever it is. So we have the executive board influencing the internal audit function, which means the IA function is not independent and objective as a result. If you then put the audit committee in between the board and the internal audit function, and internal audit reports only to the audit committee, who, you remember, are non-executive directors, they're not involved with running the business, and therefore they are independent. So if internal audit reports only to them, they are also independent. The internal audit is also independent because no one can exert influence on them. All right, so that's what I mean. That's a really important point about the audit committee, that the internal audit function reports to them. Is that clear? Again, if you have any questions, speak now. You need to speak, not write, because I can't see the chat box. All right, so I'll delete this. So strengthen the position of internal audit. Very important. And this is important. If you know that a company has an internal audit function, yeah, you're an outsider and you know that they have an internal audit function, then it gives you more confidence that the information you receive about the company and from the company is likely to be reliable, objective. Okay? And that is important because look, let's suppose you're a bank or a creditor. You're thinking of doing business with this company. You want to know how trustworthy this company is. You want to know about the performance of this company. You want to assess the risk of working with this company, either lending them money or giving them credit when you supply goods to them. Okay? So you collect information from the company. If that information isn't reliable, and you then enter into the contract, you lend them the money, for example, and then you find out later that the information was wrong, then the reputation of the company in the future is going to be severely damaged. And the level of confidence that the public has, stakeholders have in that company, will go down dramatically. So having an internal audit function gives stakeholders more confidence, and that is important. Because if they don't have that confidence, they will not deal with that company, and that company will actually eventually collapse. Okay, because no one wants to work with it. So it's, you have to think in that way. Internal audit gives confidence. Why is it important the public has confidence? Well, for the reasons I've just explained. All right? So moving on, then it talks about some potential problems with having the audit committee, and I want you to scan this. Why? Because I don't expect a detailed question on the function of an internal audit committee. And only if you had a question like that would you be asked to say, what are the weaknesses or disadvantages, if you like, of having an audit committee. So I don't expect a question like that, so I'm not going to spend time on this. So just scan this section, please. Moving forward, this is important. Who should be on the audit committee? So according to UK Corporate Governance Code, now, you don't have to use UK Corporate Governance Code. If you want to use the Vietnamese Corporate Governance Code, that's fine. Just tell the marker that that's what you're doing. So according to UK Corporate Governance Code, the board should establish an audit committee of at least, 3 or 2 members. So there should be at least 3, usually, members of the audit committee. And they should all be independent non-executives. All right? And the board may delegate, obviously, some of its duties to the audit committee, and one of the duties might be to monitor risk. The board should satisfy itself that at least one member of the audit committee has recent and relevant financial experience. Okay? So that's important. At least one person should be an up-to-date finance person. And the responsibility of the audit committee should be clearly written down. Why? Because remember we said that part of the internal control system was knowing which risks and which controls are the responsibility of which person or department. Okay? It's very important that we know who is responsible for what. And so having written terms of reference make it very clear what the audit committee is responsible for and what it is not responsible for. Okay? So those are the three important points here. Moving down. I want you to scan this, please. Scan it. Okay, because again, it gives you examples of the things that an audit committee does. Examples. And so you would need to be aware of those activities in the examination because you need to be able to speak authoritatively about what the audit committee does. But you will not be asked to list all of these examples. You will not. But you need to know that that's what they need to do, or that's what the audit committee does, okay? So scan it, understand the areas in which they work, all right? And here are some examples of those areas, and that's all you need to know. Moving on, let's talk about internal audit. Now, important, why does the internal audit function exist? It exists to help achieve the company's objectives, all right? So what does that mean? For example, let's take a simple example. The company's objective is to increase profit by 10% in 5 years, for example. So one of the things that the internal audit function will do is to monitor the costs that the company is incurring, to help decide whether they're getting proper benefit from those costs, to monitor the control systems, for example, that the company is not being defrauded, because if it is, then clearly it's not going to meet its profit objective. All right? They'll need to make sure that the reporting of profitability and cost information is accurate, reliable information, because if the board does not have that, they don't know whether they're going to achieve their objectives. For example, okay, so a very simple example, the objective is an increase in profit. What types of areas will the internal audit function look at? Well, the types I have just outlined. Okay, and in that way, they're helping the company to achieve their objectives. So that's the important thing to remember. Next important thing is that it is part of the internal control system, all right? And as such, it has the general objectives of the internal control system as a whole. So economy, efficiency, effectiveness, reporting, compliance, safeguarding assets, all of those. Remember we talked about those? So yes, that's the objective of the internal audit department. Now, internal audit will focus mainly on operational controls. Yes, so we have a system in place of internal controls, and so what internal audit will do is to check that those controls are being applied, to check whether the controls are effective at mitigating the risks that they are expected or supposed to mitigate. So internal audit goes into the operations. I'll give you a little story. My younger brother, who's also an accountant, which is very embarrassing having two accountants in the family. But anyway, he's also an accountant, and he used to work for internal audit for a very large hotel chain. international hotel chain, which was a great job because he was always traveling around the world, living in these fancy hotels, and that was work for him, and I'll never forget, he once told me about he was checking the controls on cash, and that meant that he had to sit in the bar the whole evening and just watch the barman and how he dealt with the cash, okay, which is a great job. But he was part of internal audit. That was an operational control that he was testing. Is all the money being recorded? Is, the correct change being given, and so on, yeah? So they will focus on operational controls. However, that in itself is not the complete picture. What happens if the manager of the hotel overrides some of the controls? So if the manager, for example, says to the barman, listen, don't record all of the sales, and whatever money you put aside, we will share at the end of the evening. Okay? Now, the internal auditor is going to find it difficult to monitor that. Also, the internal audit's function in relation to strategic controls will be limited, yeah, because the internal audit function will not go along to the board of directors and say, show me your policy documents for the company. Well, they can, but they can't change those policy documents because that is what the board does. All right, and so there is a limitation as to what they can do. They can't usually get involved with strategic controls. That is the responsibility of the board and the responsibility of the audit committee. Okay? So that's what internal audit does. Scan it, so it goes into a bit more detail about internal audit. So just scan this section, please. Gives you some ideas of what they should do and don't do, or should not do. It's a bit of background, really. Independence, I mean, the key point here in this section is that internal auditors should be independent. That's really important, obviously. So for example, let's suppose, one of the directors appoints somebody to the internal audit department, and that somebody really is the representative of the director because, he's grateful for this job, for this opportunity. And so the internal auditor is not going to be independent. He's going to make sure that the director's interests are protected. So appointment of internal audit will usually involve non-executive directors, and they'll make sure that the person who is appointed to internal audit is independent. Okay, is independent. So that's the important thing. This ignore. So ignore 243, please. Ignore the activity. And that's it, ladies and gentlemen. That is the end of chapter 8, a big chapter, but we have highlighted the key information in it. We've looked at an example of a question and how it might be examined, all right, and a very important area and of course very closely related to risk, okay, and mitigating risk. So before we go on and do our little Kahoot, a couple of things. The first is, please make sure that in your own time you look at the links to relevant videos. I shared that in the WhatsApp group. I've also shared that in the chat here. Okay, it's a very short video, this one. It's about 3 minutes or something. There it is. Okay, so in your own time, please have a look at that. Any questions on Chapter 8?
I have a question regarding
Sure.
the link between the risk topic and the internal control topic. So it seems